Hello, 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 and welcome to another Can I Own podcast episode. I am your host, Art Veal. Today we will be discussing the different mortgage programs that mortgage lenders and brokers and banks try to put you into to get you qualified or get you into a home. We'll also be discussing which one is probably right for you depending on your situation and what you can do to do your own research to make sure you make the right decision. Typically, what happens with mortgage brokers is you go into a mortgage broker's office, you're not sure if you can get qualified for a loan, and they immediately tell you they have a loan program that's perfect for you. And they pull your credit, they say, we've got a loan program that works for you, and then you start the process only to find out that, oh, this program you don't meet the exact requirements of it, so we're going to try to put you into another program, that kind of thing. And so it can be very frustrating at times because you think that when they tell you that I've got a program that's perfect for you, you think you're already in the process and you're already approved, when in fact, mortgage brokers are a lot of times just telling you that they know a program that you should qualify for based on what you're telling them, and you actually haven't gone through the process, and you might be disappointed later. I went through this situation quite a few times when I bought my own property, as well as when I bought some investment property years ago. I dealt with a lot of different mortgage brokers. I dealt with a lot of different banks, and they always had a program that was perfect for me. And sometimes I literally got 30 and 60 days into the loan just for them to say, oh, you don't fit the criteria of this loan. And, then I was turned away, and it was very frustrating because you kind of wasted time. So what you're going to do, there are two things that I suggest to families to avoid this kind of a problem. The first thing is to have all of your paperwork in order when you go to a lender, or mortgage broker, lender, whatever it is. You want to have all your paperwork in order because the easier way to submit a full package to them, to give them all the details they need, the easier it is to get your financing and get an answer back quickly. No mortgage broker that you go to, or at least 99% of them, can tell you that you're approved based on what they see, because they don't know. They have to send it to an underwriter or to a preliminary underwriter, which is the person basically. Mortgage brokers are giving your information to a lender, the person that's actually going to loan the money. And they're kind of like a facilitator for that loan, but they do not make the decision. So they can tell you that they believe that you qualify for this loan, and you might very well qualify for that loan, but they don't have the final say, and they don't know until they send it to that underwriter at the bank, and that person says whether or not they can actually give you the loan. So to cut down on time, the first thing you want to do is you want to get all your paperwork together and bring in a full package. Typically, they're going to ask you for bank statements. Sometimes some lenders are now doing it digitally, where they can access your bank account online and they can just pull your bank statements. They're going to ask for tax returns, so you should have that stuff already together. If you haven't filed tax returns in a year or so, especially with some people that are self-employed, get that stuff together. They're going to ask for pay stubs, so have your last probably 2 months worth of pay stubs with you, just to give them that. They're going to ask for your credit report, which you wouldn't pull your credit report. They'll pull your own credit report, but they're going to have you fill out an application so that they can order your credit report. In the Can I Own 6 Steps to Home program, we go over how to make sure that your credit report is strong enough for a lender. After that, they're going to ask to see what kind of money you have down to get into a house. They typically like to see that you have at least 3 months worth of, they like to see you have not the security deposit, the amount needed for the down payment, and they want you to have that money in your account for at least 3 months. Once you can show that you've got that money for 3 months, that usually stops them from asking questions about where did the money come from. After that, they're going to want to see some reserve in the bank account as well. They don't want to see that you have just enough to pay the down payment and you don't have money for the other, stuff that's necessary as well. Now, having said that, they're also going to want, if you're self-employed, they're going to want a profit and loss statement and a couple of other things with self-employed. We go over all of that in the 6 Steps to Home program. But the best way to know if you're getting into the right loan program is to look at one simple thing. At least this is what I use with my customers, and that is to go through the process of what's required for an FHA loan. And if you meet the FHA standards, then 9 times out of 10 you will meet the standards of almost every other program. The FHA standards, FHA is a government, for those of you that don't know, it's a government backed loan. Basically, the government is ensuring that if they get the loan, if the bank gives the loan out and you fail to make payments on the loan, then the government will reimburse up to a certain amount. They'll give the bank a certain amount of money to cover the loss. So in other words, the bank is taking on less risk because the government basically is insuring that loan. So they're limited in how much loss they can take on the loan. So with the FHA program right now, the requirement is about 3.5% down, 3.5 to 5%, and that includes closing costs for most FHA loans. So you should have roughly that amount of money in the bank, at a minimum, 3.5 to 5% of the house, the purchase price, or the price of the house you're planning to buy, and that money should have been in the bank for at least 3 months. Like I said, there's a little bit more to it, but we go over that in the 6 Steps to Home program because you want to make sure that you receive the money the right way, and you want to make sure you show the money in the right way. On the other side, as far as credit, the credit guidelines change ever so often, but they pretty much go like this. You cannot have any judgments or collections on your credit unless you are making payment arrangements with the creditor. So if you do have judgments or collections on your accounts, on your credit, you need to set up to make payment arrangements, even if it's a small amount. And you need to have made payments for a couple of months on that collection or that judgment to show the FHA lender that, you are making payments on this judgment. As far as accounts, you cannot have any accounts in bad standing. If you do have an account, they have to be in good standing, meaning that all of your credit cards and everything are paid current. If you in the past have had past due payments on your credit, then you have to give a letter of explanation, usually as to why, what caused you to fall behind. Typically, when a person falls behind, they might have a late payment for a month, and it's across all their credit cards because they had some kind of setback during that month, and that caused them to be late. You just need to have a letter of explanation for the lender explaining what happened during that time. As far as anything else in your credit, they're going to look at a minimum credit score of, at least with the lenders that I've dealt with, they're looking at least 580. And now let me be clear about the 580 credit score, because the 580 credit score is if there are no overlays on the loan. And basically overlays are saying that FHA requires you to have a minimum middle credit score of 580, but sometimes lenders don't want to just go off the FHA guidelines. And so they say, well, with us, you have to not only have the score of 580, you need to have a middle score of 640. And so they say on top of the 580, we're not going to accept anybody, even if they have the 580, we're going to accept them only if they have at least a 640. So you have to be very careful with the lender as far as what their middle score is, their overlay middle score. What their credit score, the middle score is. So at a minimum, to get with most lenders, you're looking at a middle score of 580. And again, a middle score is all three of your credit bureau scores, the score that is in the middle. Typically, you have to go to a lender to find out your actual score, because the way the loans are now, these lenders use different scoring models. Some lenders use FICO, which is what FHA uses right now, but they're trying to change that. Some use True Vantage Score. Some use Vantage Score 2.0. So there's a lot of different scoring models they use. But what you can typically do is look at your score, go online, pull your score, and see that your middle score is at least 580. And then from there, when you actually go to a lender, they can tell you your true score depending on the scoring model they use. So don't be surprised if you look at your score and it shows your middle score is a 600, and then you go to a lender and they say your middle score is 620 or 575, because they are probably just using a different scoring model, and there's no way you can control that. So typically, once you qualify for an FHA loan, or once you meet the criteria for an FHA loan, then if the lender decides that they have a different loan program, maybe it's a conventional loan program, then you probably still qualify for that loan program, because conventional lender loan programs often have they accept something a little bit different than FHA. So let's say the middle score for FHA is 580. And let's say this lender, their middle score, because they have an overlay, is 640. They might have a conventional loan that'll use a 600 as the middle score, and they'll say, well, you probably qualify for that score better, or that program better. And so they'll try to send you there. I typically instruct my clients to go to a lender, pull their credit score, get a copy of the credit score from that lender using whichever scoring model they use, and then show it to, if they decide to go to another lender and look for a different loan, show that score to that other lender from the previous lender. That way they don't have to keep running their score, and they can get an idea of if they have a program available for them. So that's the gist of this whole thing. If you're going to go with the lender and choose which program to stay with, then you want to, if you're going to go with looking for a different loan, you try to keep your guidelines on the FHA guidelines. Remember, that's no judgments or collections that aren't being paid on. That's no slow pays or late pays unless you have a letter explaining. That's a middle score of at least 580. And you have to show income that supports roughly 35 to 40% of your income can go to rent payment, and you still, in other words, the payment that's on this house won't be greater than 35 to 40% of your income. The lower, the better. I go into a little bit more detail about those ratios later, but these are the minimum guidelines. And if you can meet those guidelines, then more than likely you'll not only qualify for the FHA program, you might also qualify. You're probably going to qualify for some conventional programs. So the biggest thing is, don't let everyone run your credit and tell you that their program is best. In another podcast, I'm going to discuss how to choose a lender and what's the best way to choose a lender. But I hope this has been helpful. I know it's a little bit more complicated than I usually prefer to get in most of my podcasts. But if you have questions or comments, please leave your questions or comments in the comment section below on our CanIOwn.com page and the podcast. Also, if you can, we've recently put our podcast on iTunes. And so if you can, go on iTunes and leave a review. Let me know if this information is helpful. If it's not, topics that you'd like me to discuss you can leave in the comments section, and I'd be happy to discuss. Until next time, I wish you the best in your home buying journey. I hope everything works well for you. If you've got questions or concerns, or you want a step-by-step program to help you get qualified for a home loan, then please go to CanIOwn.com and check out our 6 Steps to Home program. It's a very good program, and I've used it to literally help hundreds of families qualify for home financing, and I'd be happy to help you. Till next time, this has been Artville. I look forward to working with you and speaking with you in the future. Have a great day and be blessed. Thanks.